Are you deciding between a fixed rate or a variable rate mortgage? Or maybe you're wondering if it's the right time to sell your property or hold on to it long term. With Canada's economy slowing and falling interest rate, there's a lot to consider. Stick around because I will break it all down for you. Let's kick things off with the mortgages. Fixed rate mortgages gives you a locked in interest rate for the term. So your payments never change, at least for the term, right? Variable rate mortgages, on the other hand, fluctuate with Bank of Canada's prime rate, meaning your payments could go up or down. Right now, Bank of Canada is cutting rates to stimulate a struggling economy. Now, pay attention to this sentence, struggling economy. So, rate cutting cycle doesn't mean it's bullish for real estate. Okay, whoever is telling you that Bank of Canada is cutting rates, it's bullish for real estate, ignore them. Okay, it depends on the cycle. Right now, we are in a recessionary cycle where everything is going down. Your GDP is contracting, unemployment is going up, economy is kind of stagnating, and Bank of Canada is trying to stimulate that struggling economy. Doesn't mean that it's going to be bullish. Okay, so now they are in a rate cutting cycle. They have brought the policy rate down to 3.25%, and there is a lot of speculation that more cuts could follow next year. But how does this impact your mortgage decision? Let's break it down by pros and cons. Here's why a fixed rate mortgage might work for you. Predictable payments make it easier to budget, even during uncertain times. And it protects you from potential rate increases if the economy takes an unexpected turn. But keep in mind, fixed rates are usually higher than variable rates at the start, meaning you might pay more if rates continue to drop. Right now, it's opposite. Variable rates are higher than fixed rate, but this situation could change. Now, variable rate mortgages, they are typically lower initially. Okay, you will benefit if rates keep falling, but here is the risk. If rates suddenly increase, which happened back in 2020 and 2023, your payments will go up. Okay, so for anyone on a tighter budget, that unpredictability could cause a lot of stress. And believe me, I have been there. It was painful for me to manage my expenses because everything was going into the interest payment. As of now, the lowest 5-year fixed rate as per VOVA is 4.14%. And lowest 5-year variable rate is 4.3%. So you see the variable expensive than fixed, but not a huge difference, right? That gap could grow depending on where rates head next year. Now let's talk about an equally important question. Should you sell your property or hold on to it long term? Here's what to consider in 3 simple steps. Okay, historically, real estate tends to grow in value over time. Okay, but we have seen a massive bull run in Canadian real estate, which hasn't been seen in the history before. So the market is pulling back from that peak. If you are in a strong financial position, you don't need to sell, right? You don't have any plans to sell your property right now in the next 5 years. Just stay in that home, okay? Because over time you will build equity. It doesn't matter, variable versus fixed, because that's your home, that's your primary residence. You're not selling it. Okay, in the next 3 years, then you should consider a fixed rate mortgage. Lock it up, peace of mind, doesn't matter what happens, your payments are fixed. With interest rate falling, we might see more buyers entering the market. Now, this is not bullish, okay? It could push some of the buyers who are sitting in the sidelines to jump in and pull the trigger, okay? There's a big difference between a bullish market versus some activity to happen in the market. So that could push home prices slightly higher in coming months, which might be an opportunity if you are thinking to sell. And number 3, are you considering downsizing or investing elsewhere? Selling now could free up cash to capitalize on other opportunities, okay? Especially if you expect further economic challenges ahead. A lot of people I'm talking to, they're moving out of Canada. That's something to consider as well. So here's the bottom line, okay? If you plan to keep your house for the long term, think of it as an investment. I know you will say housing is not an investment, but for some people it is, okay? Over time, it's likely to appreciate in value. A lot of people, especially the boomers, they have their retirement actually saved in their real estate. Doesn't matter if it's investment property or primary residence. That's what the reality is. I know that you may not agree with that, but that's what the reality is. But if you are trying to move, okay, from one province to the other, or maybe moving to US or another country, don't need to lock in yourself into a fixed rate mortgage. Move on to variable rate mortgage, and then when you sell it, you don't have to pay a lot of any heavy fines. Either way, make sure you consider mortgage options that align with your goals. Whether it's your mortgage or your property decisions, it all comes down to what works best for you. Fixed or variable, sell or hold? These are big questions, and I hope this video helped you to feel more confident. If you like this video, give me a thumbs up, subscribe, and let me know what you think about it in the comment section, and I'll see you in my next video. Financial education is very important for everybody, especially for the kids who are still at school, because when they grow up and go into the professional lives, if they don't know how to manage their finances, that is going to be a disaster to begin with. I have just published an ebook for the kids aging between 10 and 16 years to understand how they can manage their finances. So when they grow up, they know exactly how to manage their personal finances, because I have broken it down at a very, very basic level. What is money? How can we save? How can we invest? What is debt? How can we use debt? What is credit card? And how we can set ourselves for the financial future when we go into our professional life. So if you are a parent looking for a very simple to use ebook for your kids, click the link below to order the copy for your kids, and let me know what you think about that. Let's get back to the video.